Good afternoon, folks. All right, so we're looking at the dollar CAD for this past week, and I shared some things with you live on Twitter and gave you some scenarios to anticipate, look for. And this is an example, 'cause I get a lot of questions, how do I mark up my charts? Using the things you're going to learn in my tutorials. Obviously, folks that have already gone through all the content, they're familiar with some of these terms. For some of you that have never gone through the tutorials yet, and you're now just starting it through my forum, you guys can join the forum. Okay, you can use this website here in the middle of the chart here. It's my website address. It's completely free to join. It will be where I have all my tutorials and where I share some ideas, not on a day-by-day basis. I've been active recently just to get everybody's attention, let everyone know I'm back on Twitter. And you can find me on Twitter at I_am_ICT. And I was pretty busy this week with you guys. I was at the pace of what was typical with the mentorship. Okay, I gave you guys a lot of attention. I gave you guys a lot of insights and things to look at and study, setups, examples, things to do and practice. But I started the week with a specific question about what makes a trade too late to enter. Okay, what makes it less probability for a scenario to unfold? And I used the setup this morning with the euro dollar. Let's go over to the euro dollar real quick. And I framed this setup here based on this impulse leg. Okay, using the highest body, open or close, to the lowest open or close here, disregarding the wicks. Okay, right in here, optimal trade entry was entered on a down close candle. Okay, as markets are trading down, I'm trying to buy. I don't want to buy as price is moving up. So the question I started this week with was, what makes a setup one to pass on? In other words, if the market's already happened to move, okay, and maybe you sit down in front of your charts, maybe it's a thing that keeps you from seeing it live with with a job or with the everyday things that occur in your personal life. Your spouse may demand your attention. Your children may demand your attention. Maybe any old circumstance causes you to not be in front of the charts at the time the setup occurs. Is there something we can do still without actually getting the actual best case entry? That's what I started this week with, because I get more questions probably now, except for, can you give me the kill zone indicator down here? You don't need that, folks. Believe me, all you have to do is look at, draw a line on your chart, start it from 2 o'clock to 4 o'clock in the morning, and you'll have the best entry points based on the kill zones for London, and 7 o'clock to 9 o'clock for New York. It's simple as that. Okay, there's no real magic in it. The market's not reacting to those levels or those lines on my chart. It just highlights to you all the focus in that time of day. Okay, that's where the best signals come. But the question I'm seeing most now in the last 2 months since I've been back on social media is that, can you teach me how to get in? Give me the entry techniques, give me the entry price. Okay, and I spent this week really trying to drive home that, number one, please don't ask me that question anymore. I'm tired of seeing it in my email or on Twitter, or the folks that text it to me. They have missed the point, which I think is the most paramount thing in trading. You have to know where the market's most likely going. Okay, without that, the entry pattern is going to be useless to you. Okay, but if you do have a reasonable idea where the market should go, okay, and yesterday I highlighted the fact that 116.80 was probably a level that may be revisited. Okay, and it didn't happen today. It could happen later on. I mean, we could be coming down right now to pick up more orders and go higher again. I don't know that, but it's so late in the day on a Friday. I'm personally done, and I'm wiped. Personally, I'm tired. I spent a lot of time looking for setups, and this is what it was like when I first started trading Forex. Like, I was in there every single trading day, finding something every single day. and it's very draining. And to me, I have better things to do with my time and my family and my wife, and I have plenty to do. I have plenty of things to take my time away from charts and not feel like I'm missing anything. But to prove, number one, because I have those out there that doubt whether or not these tools are applicable or user friendly, or that I even use them or can use them, and if there's any real consistency or any precision to them. And I think I've probably done a pretty good job, as best I can, really, without actually being in the room with you doing it live, um, making a case for those things being true. The precision being there, my aptitude to be able to do it, and the effectiveness of the concepts. So, I'll leave it up to you to decide. I'm not going to be this active going forward. I just wanted to throw this out there at you, and I think I've done enough. And if some of you feel that I haven't done enough, then we're just going to have to agree to disagree. Okay, I think I've shown enough to prove that every single trading day I can find something, and I can call the direction. And I may not get the actual levels like today. I was looking at 116.80 as a possible level to reach for, but that's a draw. Okay, that's what I'm teaching you, is you want to think like an institutional mindset. Okay, where is the market going ultimately? And then you got to find an opportunity to get in. Now, I want to kind of like close this week with this solution to the question I promoted on Twitter. This impulse leg here, okay, is what I'm anchoring the fib on to draw your attention to optimal trade entry. That's down here. There was an additional entry in here you could have taken. And at this moment, I knew that they could recapitalize the order block in here. Mentorship people know that that's true as well. But it's a lot of you that are not in mentorship, and you're not really aware of my tutorials either. But because I shared the actual entry and where my stop loss was and where my take profit was, I knew that it would more or less draw people into the market to do the same thing I was doing. Okay. And then I implemented an exit. I waited for the market to give me an opportunity to get out at a scratch. I collapsed the trade. And I'll let you see that here. Okay, you can see the trade was collapsed at break even. And I wanted to number one, I wanted to control the fact that I had no drawdown on the trade, no loss, no nothing like that. And I opened the invitation for your mind to go to work. Okay. And I was measuring your level of conviction on the setups. Because if you're going to be on social media, number one, you're going to be susceptible to other people's opinions. And obviously, my opinion is probably very weighted in your perception of price. If I think I'm going to see higher prices in euro, if you're going short right away, you're tweeting me, emailing me, am I in this the wrong way? Should I get out? Don't ask me those questions, folks. I'm not trying to be mean. But if you got yourself into that trade, you need to get out of it the way you feel comfortable doing it. Don't let me or anyone else drive you in a direction with a trade. That's not why I'm here. But as a test and as a lesson to you all, and I opened the week up with this, so I want you to know that this is all predetermined. Okay, I was looking for this opportunity to give you this. Okay, some of you collapsed just on the sheer basis that I collapsed the trade, and we watched it trade higher. Now, unbeknownst to you, I went in and provided this opportunity to show you how I get in trades that are already underway. Okay, there's going to be times where I overslept. Okay, there's going to be times where my son had a conference at school, and by the time I get back home, there may be something that's already transpired in the charts that I can't get the best entry in here. So how can I participate in it? Right away, if I just show this on the internet, okay, I put that on the internet, right away, folks are going to say, oh, yeah, that's chasing price. Because they have no idea what I'm looking at. They have no idea what I'm reaching for, what is the context behind the setup. Why am I doing it there? If you look at the candles I'm entering on when I'm buying, they're all down closed candles. Now think about that. I'm entering just like an institution or a bank trader will. They have to buy on down ticks or down movement. It's just the rules that they go by. If I want to sell short, I have to do it on an up closed candle or while price is going higher. If I'm exiting along, I have to exit when the market is moving in the direction where I ultimately think it's going to go. But I cannot personally, this is my rules, and this doesn't mean you have to do it, but for me it works. If I know that 1680 is the draw on price, that's where the liquidity most likely is going to be pulled for price to go higher. If I believe that, and I have the conviction to assume that that's what's most likely going to happen in price, the best case scenario for me is to exit while it's heading that direction. And if it goes through, so what? I don't care. Because there's many times, and this is a perfect example of it today. I couldn't have asked for a better example. Because had it gone to 1680, I would have said to you in this recording, I wish it wouldn't have went to 1680, so that way you can see partial profits even entering late, but not in an inopportune time, because this is not a bad time. Okay? It's not a bad time. And the reason why it's because it's below the swing high. I anchored. As long as we don't, like at this point here, I would consider that not a good time to enter. But while we're below it, in reference to this old high in this area where I'm going long here on this candle, when that is like that, then yes, longs are still warranted and it's okay. And I'm going to be looking for target 1 and target 2. And ultimately, if I can get to symmetrical price swings or whatever else may be up there that I may be targeting, then great. But I'm not afraid, and I don't want you to be demanding to have to get these entry points or this entry point. You don't need that. If you understand what you're doing and you know what the draw is on price, where's market most likely going for this particular day, and I know some of you are saying, well, that's all I need to know. And I just tell me that. Well, you have to go through what I'm teaching you to get to that. It doesn't happen overnight. Believe me, I'm going to be real honest with you right now. 664 people completed my mentorship. They completed. 867 of them started. Not all 664 of them can do what you see me doing right now. Just because they completed the mentorship, that is not a complete 100%. They've done everything now, so they can see everything I'm doing. They can't do that. Okay, there's a great deal of growth, a great deal of understanding, and they're doing far, far better than they ever have. And I'm not going to answer for them. I'm not going to say that, and build on them any more than that. But I want you to understand that this is something that comes by experience. And for the, for lack of a better word, it sucks because I want to teach it so that way you can get it right away. I would love to be able to do that, but I can't. And I have to submit to that as an educator. I can't force you to know what I know by experience. So you have to get your own experience by doing these things, using these tools and these rules over a period of time. Then and only then will you know what it is that you should or should not be doing. I've made it very candid about my weaknesses as a trader. It's the exits. So I have to be very, very disciplined on the way I exit. And I think if you look at what I'm doing when I'm exiting, it's pretty damn good. And I'm not bragging, it's just that it's good. Many times you see traders that are exiting once it's already come back down and it's rolling away from where they were hopefully trying to get out at. I'm looking for levels and I'm focusing more on where price is trying to go to for my profit than I am worrying about my stop loss. I'm not trading my stop. I'm trading my profit objective. That's what I'm looking for. The stock can't pay me unless it's trailed and locking in profit. It's there for protection. I'm trading my profit objective. My focus is there. Retail-minded traders are worrying about that stop getting hit. I'm not worried about that stop getting hit. If it gets hit, it's done its job. And I'm okay and I'm thankful for that. But everyone needs to understand in trading, you're in this business to be profitable. And while I cannot promise you profitability, I can promise you a greater degree of consistency when you practice with a demo account. And that's the only thing I can tell you. Over time, you're going to see that there is a lot of substance between the things I've shared in the tutorials and the things I've been doing, obviously online with you live and on the YouTube channel. Those things will help build a foundation. They're not going to be panaceas. They're not going to be quick fixes. They're not going to be, the end of all your questions. In fact, you're going to have a whole lot more questions as you go into the tutorials. Some of you are taking the initiative to ask me some questions that I already know you're going to be answered by watching videos. And if I don't like your post and it hasn't been anything rude, it just means that I've most likely seen your comment or question, and without filling up my feed with the same repeating questions and responses, I just am leaving you to the tutorials that will come and they will answer those questions. Okay, a lot of you want to get to the end of the game real quick, and there isn't any end of the game. You started this whole journey and it never ends. So you're going to be learning for the rest of your life, and not just from me, because I'm going to stop doing this eventually, but you'll have your own lessons that you learn, and you have to be able to glean that from what you've done in the marketplace. Don't rely on other people to supply your experience, because it won't happen. It can't happen. And don't rely on other people to justify or negate your trade idea. I tested the weaker minded students, and I mean that with respect. That's not a derogatory statement. That means the ones that are newer, okay, the more novice in terms of what I teach. I knew, because of the level of respect you hold towards me, in my opinion, if I collapsed that Eurodollar trade, 90% of you would do the same thing. And my question is why would you have done that? If this setup was good enough for you to get into, and you could see why I was justifying it and framing the whole thing, if the stop hasn't been hit, why are we worrying about getting out? The stop's got to be down here. This isn't doing anything to upset the trade. But I know order block theory, and I know that you don't. If you're a new trader or a new student of mine, you're not going to know that. But you're going to know copycat, follow the leader. And copycat and follow the leader does not equate to independent thinking, therefore a independent trader. Okay, you want to be able to make the decisions free of all outside influences. You don't want anybody to help you, and you don't want anybody to be a hindrance. And if I give you setups, if I give you things, or I manage my trade openly in front of you, you're going to try to replicate or spend so much time trying to figure out why I did this or that, and you have no idea what's going on in my mind at the time. You don't know if I'm angry about something. You don't know if I feel good, if I'm sick, if I'm, pissed off. You don't know. None of that's going on. You just see me entering a stop and where I think it's going to go. And I can be wrong. And what are you learning from that? To be dependent on something you can't accurately gauge or measure. Now, you'll quickly say, oh, I'll measure it by your profitability. If you make money, then it's good. No, it's not. It's not good at all, because what happens when I stop talking to you? Where are you left then? That's what you have to worry about. Once you're independent and you can think for yourself and find the setups, you don't need me. I'm not here to build lifelong dependency on me. That's not what I want. I want to see individuals meet me, engage with my content, show their appreciation, thank me, and then keep in contact with me and let me know what they've done with it. But not, please help me, I need your help to do this. That won't happen. In the beginning, it's normal, it's expected. But I promise you, if you go through those tutorials and take a great deal of notes and study and do the things I ask you to do, and don't do the things I tell you not to do. And if you do that, your learning curve will be shortened. It won't be overnight. It won't be fast, because I can't do things fast, and everyone's going to be different. You're going to learn at a different pace. But hopefully this week I've shown that there is consistency in what I do and what I teach. And truth be told, we are in the best time of the year. And this is like the best period of the year where I am like on it. I mean, if you were having a conversation with any one of my mentorship students, they will tell you there's periods of the year where I just plain sucked. I just could not get a groove on. But I told them, I know this time of year. I've been doing it enough to know that this is where the markets become crystal clear. And also, I'm not distracted by the mentorship daily sessions where I'm getting 600 people sending me questions about what it is I need to be answering right away, and it's hard to focus, really, really hard to focus. So I'm in my element right now where I don't have a audience looking directly at me. I can be an independent thinker. I'm not thinking about who's going to chase me into this trade, and what if I don't make money on this move, they're going to be hurt. I'm not worrying about that. I'm just focusing on me, and you can see the fruits of that. Now, it's not a brag. It's not a beat a chest eating type thing. I'm being real with you. I'm letting you know that I have a lot of responsibility on my shoulders when I speak about things like now. And I want you to be cognizant of it, because many times the newer traders will come in and say, okay, this stuff is awesome. It can't lose. I'm going to go in there and put my paycheck on this because I need to pay off my car. And I'm not trying to inspire that level of commitment or adoration. So just understand there's a lot of work in this. And what you think I'm doing with the least of effort, I'm actually doing a lot to make this viewable for you. I'm doing a lot of things that I normally wouldn't even be bothered with. I'd look at the trade, I'd watch the market on my phone, and I'd be out about doing my own thing. But I'm over top charts, I'm over top my computer screens, I'm on my smartphone, and I'm tweeting and engaging, I'm prodding you. And I want you to just see what was shown to you this week. Okay? See what was shown to you. And let's take a quick look at cable too. Cable, I outlined a London setup and how I entered the market long this morning on British pound. And I outlined yesterday by asking you all very candidly and openly on Twitter, do you think they'll leave 131.80s intact? And the folks that have gone through my tutorial, they know what I was drawing their attention to, and that's this over here, these highs. That's going to be retail resistance. People are going to see that as a double top. They're going to feel comfortable about that and be empowered in their shorting. And all of a sudden, reality hits today, and that's how the markets work. They allow the marketplace to build up liquidity pools where it makes logical sense to go back up to after a buying opportunity has happened. That was over here and this morning. Okay. So I've given you several examples of how to use the scalping method, and you can see how many times per week you can easily get 20 to 30 pips easily. Problem's going to be is now you're going to look at what I did and say, well, I'm going to do that. I'm going to do 200 pips this next week coming up too. And I didn't want to do that. I don't want to promote the idea that you can make 200 plus pips a week too. That's not what I did this for. I did this to show you that every single day, these concepts will give you something. Your ability to be able to find it and trust it and execute and then manage it throughout and come to fruition to the profitability side of it, that is going to be largely skewed amongst all of you because your experience and your personal psyche, your personality and the way you think about things is going to be impacting on what you see as a bottom line in your results. And that's the part everyone wants to skip past. They don't want to know when they mess it up. They don't want to own that. They don't want to be responsible with that. And you certainly don't want to take any losses. So hopefully this week you saw me. I got stopped out on dollar CAD. Let's pop that up real quick. I got stopped out right there. You can see. Entered, optimal trade entry, came all the way up, boom, knocked me out. Went right to my stop. What do you want to do? Did it change anything? No. I wanted 26.95 and maybe even lower. I gave you 26.95 in one of the videos I did on YouTube while I was over here. And now price is gone here. And this is my final exit in here. Right in here. And it hasn't gone much lower than that. So I outlined Tuesday, high of the week, went long on this portion here, and then caught every significant price point for scalping in the whole entire market maker sell model. This is what I do. This is how I trade. And when the conditions are more appropriate for short-term trading, I target Tuesday and I get a trade on and I leave it there. But I knew I'd be busy this week. I wanted to use a lot of opportunities to get in there. So I kind of pushed it aside. I didn't get any one-shot, one-kill setups all this week. I did all scalps. And I thought one of the members on our Twitter feed accurately described it. It looked like Spider-Man shooting webs all over the place. And that's what I said to my kids one time. I said, you got to be like a web slinger. You're going to swing from one swing high to a swing low, and you see the market in that light, and you'll find setups all over the place. But if you practice and use the scalping system that I've taught you this week and what you'll have tonight in volume 3, if you work with that for a while and give it a month, I promise you, I guarantee you, your ability to find setups will go through the roof. You'll have setups at your disposal every single trading day. Now, for some of you, that's all you've always wanted. It's the only thing you've been waiting to know what it is you're looking for, how to trade it, how to find it, and I've given it to you for free. Absolutely 100% for free. And you have hundreds of hours of free tutorials coming your way in my forum. It's going to cost you nothing but your time, and that is probably very expensive to you, but believe me, it's a lot of content. At some point, you're going to go through that and feel like there's more. There is. At that point, you can take me up on my offer that I'm going to have in the forum. It'll be posted this weekend. In 2018, I'm going to open up my ICT mentorship again, and it will be a rolling enrollment. That means every new month, I will allow new members to come in. It won't be, you got to wait for a full year, because all the content's already made. It's already done. So what you'll do is you'll go through each module each month, and you'll pay for each month, sign for satisfaction and your intent to continue, and then pay the next month's membership, which is $150 per month for 12 months. Once that's done, what you're actually paying for is the access to me post mentorship. So you have all the content, all the information. Then I can talk to you in terms that I don't talk in public. I will never give you mentorship level analysis. I won't be able to do that. Okay, I'm not going to do that. Okay. In fact, it's very hard for me to talk after being so open for the last 14 months with the mentorship group. I use specific terms, I use specific concepts and thought processes that I don't make them public. So the $1,800 is really just paying for your lifelong access to me on a level that won't be viewable or achieved by YouTube or the free tutorials. Now, I already know some of you are going to say, oh, well, there's the catch. Let me tell you something. There's a lot of folks that have already gone through my free tutorials, and they've never went through my mentorship, and they're killing it. Do you need to go through my mentorship? No. Do I need your money? No. But you're going to pay for me to pay for the services that I render to those individuals that have access to me. So it's up to you. Nothing's being held back to the degree where you can't find useful setups. In fact, I've already given you something right now with the scalping stuff that by itself, that's enough. You can go run away and never even come back to me ever again and be completely content with what you can find in the charts. So I'm going to leave that up to you guys. I don't have a whole sales pitch. It is what it is. So if you liked what you saw this week, the tutorials will teach you a lot of this. Not all of it, but it'll teach you a great deal of it. And some of these setups, you will have been able to find that all by watching the tutorials and taking notes and studying. Some of the other things, the level of precision, that comes with mentorship level stuff. But I wanted to teach this week because I know there's a lot of talk about how, I'm here just to sell the mentorship. Well, yeah, I am. I'm here to make sure that people know that if they want my content, it's better to get it from me than from someone else, because the mentorship, if you get those videos from somewhere else that floats around, say someone that went through the mentorship partially or entirely, share those videos with you, okay? You're not getting the same experience that those individuals have paid that gone through. You just have videos. And those videos, while they're great, they aren't as good as being in the mentorship where I can engage and questions are asked, specific questions that make a great deal of impact that would otherwise go on unanswered because you just paid for it or watched the video that some schmuck gave to you or made you a part of. And that's not what you're paying for. You're not buying $1,800 worth of videos. You're buying complete 100% attention to specifics that I do with my own analysis, and you can ask me anything. if you look at the questions that come by way of my Twitter, there's a lot of questions they'll ask me about certain things like IPTA, which is the interbank price delivery algorithm. I will not talk about that openly. I'm not going to do that. I don't talk about institutional order flow. I use the term, but you're not learning it from YouTube and you're not learning it from what I do in the free tutorials. There's a whole different level of what's necessary to know what makes the market draw to these certain levels and know the daily bias every single trading day. I can't guarantee every single trading day's bias is going to be right, but I'm in the upper 90s, and I've given you an example of that in the last 2 months. I don't want you to think, and I'm not selling you the idea, if you are to participate and buy into the mentorship, that you're going to be guaranteed profitability, because there's still no guarantee that you're going to make money. And I teach with a demo account, just like you see me doing here on YouTube and on Twitter. I do not show track records. I don't give live statements, all that stuff, because number one, I'm not licensed to give trade advice. So I'm teaching you how to practice in a demo account. There's a stark contrast between what I'm doing and what someone licensed, like for instance, Chris Laurie. He's a CTA. He's licensed to do those types of things. He can tell you what he feels in his opinion based on his trading models and such. His opinion. I'm telling you what I think a price in a demo account is going to do. You cannot make money in a demo account and you can't lose money in a demo account, but you can learn a great deal about price. And that's what I'm selling. I'm selling you the ideas that I use to internalize and analyze price action. Now, if you take that information and you segue into a live account, those risks and benefits are all on you. Don't give me high fives for that. You did that all by yourself. So while I think it's fun and I smile a lot when it's right, and you guys done real well with it, I still cringe a little bit because it gives the impression that I am welcoming that type of thing, and I don't. I don't want that. I would rather have you tell me, this is awesome. I've learned a great deal about this, or this observation and price action was as I would have hoped for. That would be a better response or feedback. I would rather have those. I don't want to see dollar signs and trade results and dollar figures and such. I'm not interested in that. What I'm looking for is feedback in terms of how you internalize what I've taught, and are you seeing these things repeat? Because if you can't see it repeat, you're going to be stuck. And I think I've done the best. Like I said, this is the best I could have done, and I don't feel bad about it. I poured myself into you all this week to prove, number one, the concepts work. There's consistency and precision, and you don't even need those precision price points. You don't have to get in at the best price point. You don't have to get out at the best exit. You just look for these middle portions of price action and get out. That's it. And let everybody else on Facebook and Twitter and Instagram, let them pretend that they're better than they really are. I'm not here to try to promote those ideas. I'm not here to try to do those types of things. I'm trying to free you from feeling like you have to be dependent on me or anybody else. Because if you look around, there's a lot of mentors right now. Okay, a lot of teachers, a lot of folks that supposedly are going to teach you how to do this stuff. And I'm not here to measure up to the next guy. I'm just saying, the only thing I'm asking is if you are seeing substance between what I've said is possible and what I've shown this week in the last 2 months. It's pretty consistent. So I'm going to be returning back to a lot of hindsight analysis as of next week, and my reviews are going to be just that, reviews. If I see something that makes sense, on an intraday basis, I'll tweet you something and tell you to focus on this or that. But I'm not going to be to this level again. It's a lot of work to do this stuff, and I'm already drained. So I have your volume 3 to do tonight, and I will go through the motions of getting that done. It'll be online before midnight New York time, so it'll definitely be delivered to you for what we determined as Friday in the States. So hopefully you've been inspired this week. Hopefully you found something that was useful from an educational standpoint. And if anything, at least I've answered in my best ability this week the showcase that, number one, I can trade. Two, I can do it pretty fucking good. And it's consistent. So is it perfect? No way. Absolutely not. I'll be the first one to tell you I am not perfect. I wish I had better exits. I wish I did, but I'm, for the lack of a better word, I'm content with them for right now. They've served me pretty well, and I'll leave it up to you to decide if there's anything else that's worthwhile in terms of chasing or studying with my content. Until next time, I wish you good luck and good trading.